What's good, everybody? Jordan here, back with another video, and in today's video I pretty much am just going to be basically making a part 2 of the how to understand market structure video that I made about a year and a half ago. It's like one of the first ones, so if you want to compare you can, but the audio is going to be a little bit better in this video, and I probably will have just a couple different nuances that I learned in between now and the first video that I made. So without any further ado, kick back, relax, and I guess get your notebooks out, because we're just gonna jump straight into it, starting off with the fact that each market, every market has either bullish or bearish sentiment. It's either going to be in a bullish trend or a bearish trend, an uptrend or a downtrend. So before we even get to the candlesticks, again, this is kind of what I did in the first video, but I just want you to understand the characteristics of an uptrend and the characteristics of a downtrend. So we'll just start off with an uptrend, which is also considered a bullish trend. You have your higher high, you have your higher lows, you have your higher highs, your higher lows. Bullish trends and uptrends are considered or they consist of higher highs and higher lows. So price just can't go straight up, price just can't go straight down. Anything that goes up must come down to kind of get a little bit of a discount, to grab liquidity, to chill out, to get a discount. I think I said discount, but you get the point. It's we call it a pullback, we call it retracement, and in these moments, especially for my system, in these moments, that's where you could get in for that discount, get in for a lower price, and possibly make some money on the turnarounds and on the continuations and the reversals. So, and it'll keep going like this, as far as you want it to, higher high, higher low, higher low. Higher lows will come back to retest the higher highs in the previous areas in which it just broke. Higher low, higher high, higher low, higher high. So we'll stop right there. And the thing about like the higher lows is based off of, again, your system and the way you trade. Those areas can very well just be areas of where you want to buy in at. Each area of these retracements, and honestly, I could give a pretty good testament and a review for this, that a lot of traders love to wait for the pullbacks to then enter in their trades and just wait for their system to play out, and they'll take buys up here all day, every day, all day long. We're taking buys, boom boom, stop loss below some lows here, and then boom. But that's a little bit too far, right? We're just talking about market structure. All right, let's relax. So the thing about these areas of retracement is also, you want to be on a higher time frame. If you see, and let's go to the candlesticks now. Here, if you look top left, we're on a daily time frame. And the thing about the daily time frame and the weekly time frame and the monthly time frame is that the higher the time frame, the more it takes in place, the more that you can rely on that time frame. So the higher the time frame, the more you can rely on it. The lower the time frame, that's when you start getting into your entries, and there's just more detail on the chart. So in case you don't know, each candlestick for this time frame represents one day. The next candle is another day, the next candle is another day. So in this sediment, in this area here, we start from May 2021. We got, as you can see, if we drew a trend line from starting here all the way at the top and go down, that's clearly first of all bad trend line, but that's clearly something that we call bearish sentiment. And honestly, because we're talking about bullish sentiment and bullish analysis, we'll just go here for this example. We'll bring it here to to a bullish environment, an uptrend, and we could take a trend line and go all the way up here again and do the same thing over here as well. And so, as you know, from the daily time frame and the weekly time frame and whatnot, we know that in a lower time frame, because of a higher time frames, we know that on a lower time frame that we can get ready to take opportunities for buys. And it's the same thing when you're talking about a bearish environment. And if you remember the higher highs and the higher lows, it's the same thing. We got the higher highs up here coming to retest the area in which it just broke, making a higher low. Higher high, new higher high being created, coming back to retest the area in which it just broke. Higher high, higher low. And you really can't make this up. It's the same thing every time. What goes up must come down, and once it comes down for that retracement, it's just like a discount. You know, think about your favorite store and your favorite product, and if something is $100 and it comes down to $50 for that day, for that week, for that month, then that's a 50% discount, and you want to buy that every time. You know, you want to get the best bang for your buck. You want to buy the things at the cheapest points possible. You know, so maybe you can buy, you know, 2 things of laundry detergent, or, you know, 2 pairs of socks, or 2 packs of socks, you know. And basically my main point is that you want to get in for these discounts, and those discounts are our retracement periods. So with that being said, during those retracement periods, sometimes, you know, you could look at the lower time frames and look at and see and realize that there might be you know, there might be an inverse head and shoulders, you know, which looks like this. And if you don't know about inverse head and shoulders, maybe I should do a pattern video. Is that an inverse head and shoulders is a reversal pattern to the upside, and it would look a little something like that. Not as perfect, but, you know, then we would continue to the upside. And honestly, as I look right over here, I can take this and move it right over there. Like, I literally can't make this up. I didn't study this before this video or anything like this. This is exactly what happens during these areas, and just these areas of interest and these areas of possible reversals, that throughout time, when you look at bigger and larger time frames, you can see these play out. And again, once you go to the lower time frames, you can really get in some really good moves, and to, you know, be able to take this opportunity and take these buys all the way up, you know. So let's quickly switch. We don't want to make this video, I don't want to make this video too long, so let's switch over to, and that's bullish environment. You got to remember that. Make sure y'all writing this down. So let's switch to bearish environment, also known as a downtrend, and let's look at those characteristics over there. So if we come back down here, and again, even if we want to skip the arrows this time and we want to draw a trend line, where's my trend line? If we want to draw a trend line from the top of the highs all the way down, we just froze a little bit, all the way down, you know, we can clearly see, again, that's a bad that's a bad line, but we can clearly see that we are in a bearish environment. You can even do the lows, and boom, we're in a bearish environment. It's not always going to be perfect, but nonetheless, you can see that we're in a bearish environment. You know, this is the downtrend. And during these times of downtrend, just like the opposite of an uptrend and bullish environment, you will then at that point, it's considered, you know, just buying, or I'm sorry, selling at the top and taking your sales down to the bottom, right? So let's go back over here and just get the, you know, the characteristics of a downtrend. And if you remember the bullish trend, we had higher highs and higher lows. But for the downtrend, and when we are in bearish environment, we have lower lows and lower highs. Lower lows, lower highs. Why is it called lower low? Is it because this low is lower than this last low. Why do we call it lower highs? Because this lower high is higher, or is lower than this lower high. So again, what we got? Lower low, lower high, lower low, and so on and so forth. So again, like the areas of importance when we're looking to buy, those areas of retracement are the same things, and, you know, just flip-flop. Honestly, it's just price pulling back to those areas in which it just created, and those lows that it created. Go back, get that discount, grab that liquidity, you know, whatever you want to call it, retracement, and then, you know, you might see something like, you know, a regular head and shoulders form at that area, and then to where you could take buys here at the lower, after the lower low has been created, wait for the lower high pullback, and then take your sells to get ripped down to the bottom. And you know, again, this is the lower this is the, you know, the regular head and shoulders. You got your left shoulder here, your head here, your right shoulder here. The characteristic is then wait for the break of this neckline here, for that lower low to be created, wait for the pullback and the retracement, making a lower high, wait for your entry system, and then take and rip those sells to the bottom. And that's the characteristics of a downtrend. You know, you want to be ready, you know, primed to take those opportunities, you know, whenever they present itself. And so let's take it back to the candlesticks and see what we can see. See if we can find a nice inverse, you know, a regular head and shoulders. And just like when you saw the inverse head and shoulders at the bottom of, you know, you could call it support, you know, at support areas and whatnot, where your times or reversal are prominent and are more likely to happen. Once you see areas, you know, once you get to these previous highs, you can start thinking to yourself, okay, you know, I'll start to see, you know, some reversal candlesticks going on, some reversal patterns going on. And just like, you know, what we did at the top, I mean, what we did for, you know, a bullish trend, we could again do exactly the same thing for a bearish trend. And what would that be? It would be, you know, seeing and waiting for that higher time frame reversal pattern, which in this case is, you know, it's not really that clear. Let me just make it a little bit more clear. You know, you can see a little bit of the you can see a little bit of the regular head and shoulders. Make this a little bit better. Left shoulder, head, right shoulder, the pullback. I mean, the break of, you know, the break of structure here, break of the lows, and then the pullback to get that discount to retrace the area in which it just broke, and then the continuation down and making higher or lower lows and lower highs, continuing its way down. So if I took the arrows, put them back right here, you know, we got the boom, 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 and then again, it's not as steep and as perfect as that initial, you know, first set of arrows or whatever, but you get the gist. Hopefully you get the point. And what I'm trying to show you here is that, you know, once you see that on the higher time frame these patterns are starting to occur, you could then go down to a lower time frame and see, you know, where you could get in and where, you know, price is starting to flip. And you know, once you start getting in those reversals and or really realizing the reversal patterns, you know, that's where your money is made. You could take these buys on down and just continue to buy and hold, and or I'm sorry, sell and hold and sell and hold and sell and hold some more. And then again, you know, it will follow the bearish cycle, you know, all the way down until it makes what? Until you start to see, you know, a higher time frame pattern be formed once again. Here, boom. And this isn't anything like an inverse head and shoulders, but nonetheless, you know, it's got a little bit of, you know, those same characteristics in the sense of we've gotten an area of support be built here. You know, price didn't go down any further. It just made what we call maybe an equal low and another equal low here. At that point, you know, maybe you consider this the 3 touches of support. You know, 1, 2, 3, or maybe 1, 2, 3, 4. I don't know, 1, 2, 3. Those are big important touches, and in that case, your area of structure and characteristic change will be these lows here. So you could tell yourself, again, based off of higher time frames, once price breaks this area here, now we can start to look for the buys on up. Once we get this broken structure here, we could look for that retest, which is something, you know, we got a little bit around here in this range here. We could look for that retest, take that retest, or we could wait for, you know, buys to continue up until, if we want to play it a little safe, we could wait for those buys to continue up, and then notice the actual bigger break in structure in this area, in this range here, and be able to feel comfortable taking buys on up and making money this way. Wait for the pullback and then continue higher. And really, like, if you just learn this like market structure along with price action and just like the candlesticks and the way that they close, and just I forgot the word for that, but just like candlestick structure, I guess that's what I'll call it for now, then you can really take that, hone everything, combine everything, and put it together, and you'll be able to make the most out of your opportunities on these moves. Like right here, not necessarily a double top but a double bottom, but again, you got the 3 touches down here at the bottom forming an area of support, you know, giving you a nice signal. It's like, all right, boom, 1, twice, and if I see that this, you know, second touch is happening, and I realize the, you know, doji type candlestick here, immediately I'm thinking, all right, maybe we're gonna get a nice double top for the continuation to the upside. However, you know, we got a doji, which, you know, if you see a doji on a higher time frame, more times than none you're gonna, you know, see the opposite in which you're going. So if you're at a bullish sentiment, you're in bullish, you know, environment, and you see a doji at the top of that bullish area, and then if you see a doji basically form as the next candlestick, you then know that, okay, a change is coming. A doji really means indecision, and that a change is coming, and in that if you're in any positions going, you know, to the upside, you know, maybe you should think about closing some of those positions and be ready to sell to the downside. So just a little couple, you know, nuggets in there as well. But yeah, I don't want to make this video too much longer. I think we're sitting at like 15 minutes or something like that. I think the last video was 23 minutes, and I wanted to make this one a little bit shorter. So I really hope that, you know, somebody learned something here today, and hopefully this part 2 was a lot more clear than the part 1, and that you were able to understand a little bit, you know, about market structure, and that, you know, hopefully it's just not too difficult for you. You know, I always just want to be able to help someone, you know, grasp their journey a little bit better, and, you know, if I can do something like this with the videos, hopefully it'll be more consistent, and, you know, I'll continue to do so. But at the same time, make sure you guys get the gist of just lower lows, lower highs if we're going bearish sentiment, higher highs and higher lows, you know, if we're in bullish sentiment. And all you got to do is, you know, just write some of this stuff down, and honestly, you could just draw it out in a diagram. I used to do the same thing. You draw it out in a diagram, and you practice the drawings, and come to the charts and show up every day. You know, you'll start to grasp these things a lot easier and a lot quicker than, you know, you're accustomed to seeing, and you'll start seeing them play out. You'll be able to form your strategies and, you know, make some money for yourselves in these markets and extract money from these markets, which is honestly, you know, harder said than done, or easier said than done. So, you know, with that being said, you guys, I really appreciate anybody who, you know, showed up to the video and watched the video and just took notes here today. If you guys have any questions, make sure you hit me up in the comments, or let me know anywhere on Instagram. You know, if you can find me, I'll leave my Instagram below. And again, I appreciate you guys so much for this, for watching, and make sure you hit that like button, hit the subscribe button if you're new to the channel, and I'll see you guys in the next video. Peace.